Well, we have earnings season in focus over in Kenya as well. And just yesterday, we had Kenya's Equity Bank post that first half profit rose 46%, beating market forecasts of a 30 to 35% growth on expanding interest income and commissions. That performance sending shares to their highest this year. And we've had the chief executive paint a rosy profit outlook for the second half as well. Joining us now from our Nairobi studios is the man himself, James Mwangi. Thanks so much, James, for joining us this afternoon. Well, the market certainly impressed with those first half numbers released yesterday. Reports we've been seeing highlight specifically how interest income had much to do with that growth you've enjoyed. So run us through that component as a growth driver and some of your other growth contributors you've enjoyed.
Thank you very much. It is true that the interest component grew at a faster rate than the average total income, and by a margin of literally 20–30%. And this is driven by two aspects. The quality of the loan book has improved significantly because of the change in the weather pattern in the country, and the farming community is able to pay their loans promptly. The second one is the bond market in Kenya have been at its best, and there is quite significant earnings from bonds and bond trading. And basically also with the economy recovering from the post-political crisis that we experienced 2 years ago, the global financial crisis coming to an end, we are seeing a significant increase in economic activities by the business community. While
overall, all is very positive, where it's interest income that has been the big driver here, what direction do you see interest rates currently charged taking moving forward, where the banks of Kenya have been put under significant pressure by the central bank to lower their rates moving forward? And how much room does Equity Bank itself have to play in?
Yeah, it's true. There's been significant pressure from the central bank, basically following the change in the fundamentals in the economy. We're seeing inflation coming down to 3.2%. We've also been seeing the central bank reducing its lending rate down from 9 to 7. And all these are indicators of the expectations. Banks have responded in the same vein. And we are seeing a reduction of interest rates by about 300 to 400 basis points over the last 6 months. This is likely to stabilize as the interest rates in the bond sector, because unfortunately enough, the government has also focused on issuing long-term bonds, which compare more favorably with lending rates because they are medium and long term. But with the economy anticipated to peak at 4 to 4.5% GDP growth rate, we expect that the growth in volume will overcompensate the reduction in interest rates.
So you may have to remain a bit sticky on that end. Consensus overall, though, seems to be that Equity boasts quite a strong strategy in terms of targeting your customer base and reaching more of the unbanked. How do you see your strategy evolving as we progress through this year? Is it a case of us simply looking at Equity Bank doing more of the same?
That's true. One of the strategies to continue to be strong in our core area of operation at the bottom of the pyramid. But the good thing is that given that we have over 5 million customers, we have a significant number graduating from being micro enterprises to small and medium enterprises. And the bank have opted to create an SME front whose recruitment strategy is the retention strategy of the micro enterprises. So we expect the bank to be now more inclusive than ever before.
Well, let's take a look at your regional strategy, because you've said that you're going to be, holding back in terms of expansion and, branch expansion specifically. We've got two operations running, or your arm stretched in two directions, in Uganda and Sudan. Sudan has proven to be pretty contributory to the bottom line, the profit line, but Uganda posing somewhat of a challenge. What kind of turnaround are you forecasting there, and how soon?
That's true that the picture emanating from Sudan is very, very impressive, making profit in your first year of operation. But also when it comes to Uganda, we need to take this in context that the bank doubled the branch network, tripled the number of employees, and rebranded. Not only did it transform the MDI into a commercial bank, but rebranded it into equity and cross-listed at the same time into Uganda. So that was the heavy upfront costs, and we expected that that would pose a challenge in performance. But we are seeing that the performance of the second quarter has dramatically improved compared with the first quarter. We have cut the operating loss of the first quarter by 4 times. So we expect this quarter we should be able to be in positive territory.
Would you have done anything any differently in that space now that you enjoy the benefit of hindsight?
We have analyzed, and we thought the way we did it was the best because we took a significant hit when we were still outperforming the market. And now when the market is looking up, we would still be able now to outperform the market because we have taken the cost up front.
Well, the market is watching the referendums both in Sudan and Kenya because any political upheaval on those fronts from the votes could affect Equity Bank, as you said, because of the fact that you are at the bottom of the pyramid and that's where your focus is. Just take us through some of your strategy in terms of managing through that period. Are you anticipating many challenges to emerge there?
We have been observing the situation in Southern Sudan very, very closely and very keenly. And all the predictions we have is that the referendum will be a replica of the elections that were just completed 2 months ago. The way they conducted the elections, and if you really analyze the voting patterns, it shows that it will not be at the grassroots level where you'd have challenge. It can only be at the negotiation table. Coming back to Kenya, we're looking at the statistics and data available and the way the elections or the referendum campaign has been carried out. It has been very, very clear that people are looking for peaceful referendum where decision will be honored. So we would expect an upsurge in economic activities, given that the uncertainty that has been there from a political perspective might easily be brought to an end.